So I took on a position in AMC today. Yep, I became a little ape. I'm going to show you exactly what I was looking at, why I took this position on, why I added it into my account. Little ape, like I said, little ape. But what I'm seeing, what I've seen in the options market, why I think it's going to go higher on this, and what to expect or what the market's expecting. So Ape Nation, tune in. There's a couple things you could take away from here, but I'm going to show you exactly what I was looking at, why I took on this position. So let's take a look here at AMC. AMC has been Ape Nation. It's getting headlines from Financial Times, talking heads on CNBC and everywhere else. But hey, it's about AMC, and it's about sticking it to the hedge funds, right? So what we're seeing here today is we saw a little bit of a lift in shares, and it was due to Fast 9 of 5,000. They came was better expected. People are coming back to the theaters, all good. One of the things that we want to keep an eye on for is this, this stock. Anyone that talks about valuations, I mean, it's just out the door right now. It doesn't really matter. We have a battle brewing, or there is a battle. Got the apes battling the hedge funds. If you, we'll take a look at the option montage in here in a second. But this is still hard to borrow. GME is none to borrow, so there's none to borrow. This one is still hard to borrow, so that means people can still short, find the location of those and still short into it. Not a bad thing, because if you continue to squeeze them and they have to keep covering and covering, that's why you can get that momentum higher. So, what I'm thinking is that we could probably get into the 68-ish range going into the next few days. Now, one of the things that you could take away from this video and look and help understand navigating the market, because one of the things that you want to be able to do is keep sticking it to them. Keep pounding it to the hedge funds, because one way we're going to get our power back is taking our money back. And the smarter and more successful you become, Ape Nation, the more advantageous, the better platforms, the better technology we'll have as the little guy. So one of the things that the market looks at, or how options are priced or expected to move, what's known as, is we take a look at previous. So this was a 625. This was on Friday's close. You can see here this HTB, hard to borrow. So what I'm looking at here is I'm looking at the implied volatility, the expected move of these weeklies, which is this Friday. So at that time, they were pricing in $11.50 move. That's when prices of the stock closed at $54. So what you would do here is you would add $11.50 higher and $11.50 lower. That's the expected move of what the option market was pricing in for these options expiring on Friday. Now you can see here the expected move is different, but what we're looking at for this week is $11.50 from $54 and higher and also lower here. So that puts us around $65. And if we come into today, we got a movement of $4 higher. So now we still have, it still can push up higher, but 65 is where we're looking at. So one of the things I noticed today in the option market here, so what I did was I put on a spread. I bought the 65s and I sold the 75s here. I got a pretty big spread here that I took on, and the main reason of this is because of if prices do soar higher and continue to get squeezed in the next 4 days, volatility will increase. So I got to make sure the spread is wide enough to offset that a little bit. Anyways, so this is the spread that I'm looking at. My best situation is Ape Nation pounds it and we get all the way past $75 and I can cash out. And my little spread that I put on here, I think for 90 cents, I can get out and for a hefty profit here. So what we're looking at, or what I'm looking at overall, is a lot of people are talking about these 145 strikes here. That's just crazy. $145. I mean, for me, when I look at this, this is something you would sell, not sell naked in sense of just selling the options, but you want to delta hedge those. But I mean, this is how interesting it is to see all this positioning in here. So the main one that caught my eye was the 65 strikes that were active here. There are some buyers coming in here as well, and there's some activity in the 75 strike as well. So those are the reason why I put that position on. Now again, what I'm looking for here is I'm looking for the pop higher. Understanding as well, back to the purpose of that expected move, is that if we do get to $65, back to the chart here, this is where the levels where people who are finding locations on shares to short are going to start to sell into it. So once prices kind of stay around that level, this is just a volatility. This is all volatility here. It's a battle brewing. But mindful of those levels is purposeful because that's where short sellers, those on the other side of the trade, are going to try to lay into their shorts. And as they continue to get pushed at those levels, that's where you can start to see the momentum. So that's where it's mindful to understand those levels as well and understand the kind of the ranges that's going to happen. It's not always going to be this big squeeze. You see where we get this pullback here, you get some trading, you get kind of the dust settles. You got this big blow off top, the dust settles, and we can look at a chart of GME, it's the same thing. It takes time, you get the big blow off, it takes time, you get new buyers in, you get those that are trying to step back in the short as well, because you need those short sellers if you want to pound it to them. So you start to see that kind of play out. It takes a little bit of time, and then all of a sudden you see that next rocket ship higher. So that's why you see the volatility, which is this green line here, from beginning of June, decline all the way from the 25th. So the last 25 days, you've seen volatility. So I've seen in the Reddit forums, people talked about buying their options, and they've seen it decrease. Well, this is the reason why. Because it hasn't increased, it's decreased. So that premium you bought, let's say at $1, over this time, not only time has ticked away, but also that volatility has come out of it as well. What will happen though is if it exceeds that expected move, or it shoots higher, that volatility will pump up. But that doesn't mean, let's say you bought 3 weeks out, you're in your last week, and now you're hoping, your fingers crossed. It's not the best situation to be in. One of the things it would be is to roll that position. You're going to be rolling it for a loss, but at least you salvage some of that. So that's kind of another key thing here, because I've seen some people talk about holding into the last minute. Well, if you're mindful, if you're looking for that pop, the best thing to do is to buy. You're buying time. You have to buy time with that. So what I'm thinking is that we hit into 72, and 65 is that level. If we can push into that, I think 65 to 72 is going to be that level where short sellers are going to come in pretty aggressively, and that's where the battle is going to happen. That's where the fists are going to meet here. You got this level here. People are looking at this. Short sellers. There's still 88 million shares short, but this is the levels they're going to come to. Now, if it can exceed that and get through that, that's where those prices go from $80 to 100 and to the moon. So that's what I have here. That's what I'm looking at AMC. As I said, I'm just a little baby ape, just a little one. I got a little position. But hey, let's see what happens here. And go Ape Nation. So we'll see you in the next video, and I'll talk to you later.